Hey, welcome to my channel. My name is Kat. I'm a California CPA, and in this video I'm going to explain you how to fill up Form 1120, how to prepare C corporate tax return based on assumption below. Let's start. Alrighty guys, so let's start with definition of C corporation. So when we go to IRS website, it says that C corporation is recognized as separate taxing entity. So what it means is actually taxed separately, and it's a separate business from shareholder. So what it means, it's actually shareholder is dividing their responsibility or their own assets, their own tax liability from C Corp. So they function separately, business and the individual, whatever they do. Also, it says that the profit of corporation is taxed to the corporation when earned. So the C corporation is paying tax itself, and then it taxed by shareholder when they distribute the dividends. So basically it's creating the double taxation. So that's probably the biggest cons of having C Corp, but it's also lots of pros. For example, let's see what it says here. I mean, it's not much, so I'm just gonna go over this very quickly. So C Corp, the cons is that it separates the responsibility or any kind of like legal actions towards individuals' assets from the business. So the shareholders are actually like not responsible for anything that C Corp does. Another advantage is, like, let's say if your company wants to go public one day, so you kind of have to be C corporation because it's so much easier to do like lots of kind of things like change in the stocks and things like that. So that's a very general overview, but I think what I really want to explain to you is how Form 1120 works and how to fill it up and kind of like go over each page. So let's move to this. So this video will be based on this beautiful work paper I have that will have income statement for our corporation, but important things from here are our income, we have expenses, we have compensation for officers. So that's kind of what is important. We have balance sheet here, and balance sheet will have cash and assets, and what is important for us is this partner's capital account. So we'll also have a cap table that I just mentioned at the beginning of the video. So we'll prepare, so this video will be based on this capitalization summary. So the corporation, C Corp, issued stock. So they issued 2 million stocks, outstanding authorized shares. So they have those issued and those are unissued. The par value per common state is like whatever it is. I think it's less than 1 cent. And so here we have 3 shareholders. One of them is officer, and that's kind of like they divided their common stock based on their paid-in capital. So each of them paid in those amounts, EPIC, which is additional paid-in capital. And then let's see, what else? What else do I need to explain you? So those would be their percentage, and it will be based on their additional paid-in capital and additional paid-in capital. And total capital contributed is summary of common share par value plus additional paid-in capital. So this is summary of those two numbers. In this example, we will assume that the C corporation has this dividend distributions of 20K this year. And also, so we have dividend distributions and they show up under balance sheet right here. And additional paid-in capital of 50K. Well, hope that makes sense. This is like our assumption for this 1120 preparation, and I'm gonna go into details, more into details right now. Thank you for watching my video. Just a quick interruption. I'm sorry. Just to tell you that I do sell online courses. So if you go to my website, remotecpanla.com, it will give you more information about online courses that I sell and what I teach, and with more information about me, agenda, on what we do. We have a weekly calls. We go over the different kind of issues or problems we can have in a tax software. So in the end of this 1-month course, you'll be able to prepare like a complex tax return in any tax software you choose. Thank you again. Please continue watching my video. So this is how 1120 looks like, right? It hasn't really changed much since, I don't know, whichever year. So it's pretty not that complicated. So let's just go page by page. So we'll start with 1120 page 1, and we'll put our name of corporation, the address. So for this example, I assume this is the first year of filing C Corp. So date incorporated would be in 2023. Let's do it July. So if the date incorporation is in the middle of the year, we have to include this information in here because we kind of have a short year from July to December. Then we put, if it's initial year, we need to check box right here. So this first page is kind of like an income statement. So all we have to do is kind of just enter our income and expenses from our income statement. So for example, from here, so I inputted like gross receipts, cost of goods sold. The thing to remember here, compensation of officer has to be listed separately as a separate line right here, right? And also we need to fill up form 1125A. So let me find it now. 1120. Sorry, not 1125A, it's actually 25E, my bad. But this form is actually something I'll show you as well. Why not? If I already have it opened. So when we have a cost of goods sold right here, it's like we can just override the number here. So we have to fill up this form 1125A, I'm sorry, for cost of goods sold, and we need to put inventory at the beginning of the year, inventory in the end of the year, and purchases to kind of like reconcile it. And this number, cost of goods sold, should tie to our income statement. So that's short overview of cost of goods sold that I wasn't supposed to go into, but oh well. So here's our form, compensation of officer. So we have to put name of the officer here. So we go to our cap table and we have like one of the officers, like one of the shareholders is the officer. And so we need to put their name, whatever their actual name is. I'm just going to use this example, their social security number. So this is something to request before we prepare tax return. And then percentage time devoted to business. So, I mean, supposedly it should be 100% because, I mean, they're officers, right? Percentage of stock owned, and that's something to go back to our cap table. So they own 60% of common stock, right? And we got this 60% basically by their agreement. So this is something we received when we file articles of incorporation. And then here we should include amount of compensation, which means their salary. Right here, 20,000. So the cool part about C Corp, so technically, like let's say we have this thing, we can change their salaries a little bit. So like let's say we don't want C Corporate to pay this tax on a C Corp level, and then shareholders pay tax again on their personal level. Potentially, we can increase the salary and make this income smaller. I mean, if it's justified, of course. If it makes sense to pay salary more, like let's say pay bonuses to somebody or officer to receive more for what they actually did, then we can do that. So that's kind of like a way to do like some tax planning. Okay, cool. So this is what we need to fill up, right? So we just filled it up based on our income statement. So in our example, the book income is $37,236, and they have one book to tax adjustment, which is meals. Like majority of the year, by the tax law, meals are 50% deductible. So we made this assumption, and here's our taxable income that ties to this number. Another important things when we do income statement is to make sure we fill up Schedule M1. So Schedule M1 is actual reconciliation from book to tax. So what it means, and I already just noticed a mistake I made in here. So I think this would be my book. Yeah, so will be my book based on my adjusted, I'm sorry. So this is supposed to be my adjusted book balance, and I'll look into Workpaper, right? It's a little bit different. And this guy, it's supposed to be, one of them should be book and one of them should be tax. So whichever is higher, which is this guy, should be taxed, right? So this is our tax and this is our books. So we added, originally for books, we deducted more meals and entertainment because they're deductible for books, but not tax. So for tax, we'll have a little bit bigger income because we take less deduction. So this thing should reconcile to our internal books. Alrighty, so let's move back. So let's kind of go over another very important schedule, balance sheet, and schedule M2, and then we'll go through other pages. So balance sheet. So we assume this is the first year of corporation, so beginning of the year would be zeros. If it's not first year, we need to get information from prior year tax return. So for a first year, we have like a cash here. So I kind of like filtered up all these things based on our balance sheet. So our total asset is 68,236. And then when I got to liabilities part, sorry, I was just playing with this. And I deleted my liabilities because I was like, what is the point of having liabilities at this moment? So anyways, so we need to fill up this thing. So common stock goes in here, right? Capital stock, preferred stock. We didn't issue, I'm sorry, we didn't, my bad. I'm glad I recorded this video. So we decided that we issued common stock, but not preferred stock. So this 1,000 should go in here. Alrighty. And then we have 50K of additional paid-in capital that goes right here. This thing, return earnings unappropriate, it actually comes from right here, from Schedule M2. So the way it's calculated, we have to add up. So the beginning is 0, but next year's beginning will be this year's ending, right? So it includes a net income per books, so this amount. And now I feel like my calculations might be a little bit off, but anyways, just believe me, it all adds up. 36,824. So it includes net income per books. We decrease it by any contributions or dividend distributions we have. So like this year, we have this dividend distributions of 20K. And so basically distributions and net income, this summary of those two amounts, which is 17,236, should be our, yeah, I'm just kind of like confused because our book and tax are a little bit different, but it doesn't change the idea, right? The idea is we start with book, we get to tax right here. And for unappropriate return earnings, we should add book income and reduce it by any distributions we have. And this number supposed to tie to our balance in the end of the year on Schedule M2. Yeah, so that's kind of it. So it ties to us, and then like obviously this amount should tie our total assets, should equal our total liabilities and shareholders' equity. So that's how we fill up this, like the most difficult part of this Form 1120C, I would say. So let me just go over other pages very quickly. So Schedule C. So Schedule C is dividend inclusion and special deductions. So most commonly it's used when we need to include dividends from another C Corp, which in our case we don't, so we don't need to fill it up. Schedule J, this is where we calculate the tax that C Corporation has to pay. On Part 2, we put any estimated tax payments or prior year overpayment, right? Schedule K is kind of like a general information about our corporation. So we put accounting method, which would be cash for majority of C Corps, unless they very big corporation and they require to do accrual, then it will be accrual. Business activity code, so that's something you can just search their instructions and look it up under Form 1120 instructions in the end. A business activity, what they actually do, product or service. And now we have like all these questions we need to fill up. So for example, like those kind of things we usually like answer no if they Is the corporation a subsidiary of affiliated group? So those kind of things we say yeah, no, unless they are. Here, if any individual owned more than 20%, we have to fill up this Schedule G. So let me show you how it looks. So it's here we need to list entity, and right here in part 2 we need to list individuals that owns more than 20% directly. So we need to list their name, EIN, country of citizenship, and percentage owned. So in our case, because we have 2 individuals own more than 25%, we have to list those shareholder 1 and shareholder 2 right here. So one of the questions, so this is basically, did the corporation own 50% of stocks in foreign or domestic corporation or foreign or domestic partnership? So for us it's no, because we didn't own 50% of shares of corporation or partnership. Question number 6, did the corporation pay dividends in excess of corporate during accumulated earnings or profits? So we did not, but if we did, we need to check the box yes here and fill up this form. Question 7 is very important because it says if any of 20% people who own voting power in the corporation, are they foreign, right? A foreign person owns any 25%. So basically, we need to check if any of those people who own more than 25% are foreign. If they yes, we need to fill up this form 5472. So that's super important because if you don't fill it up, they have 25K automatic penalty or letter sent to them now or later. So we need to make sure we fill it up, this form, if you have any foreign shareholders who own more than 25%. And right here, let's see what else is interesting, like how many shareholders we have. So we have put the numbers here, NOL. So that's kind of it for this page. This page also general questions. So let's say if our total receipts and total asset in the end of the year were less than 250K. So I answer yes. So technically I don't have to fill up Schedule L, M1 or M2. But I did because I want to fill it up for my own records. And so next year it's easier for me if the company becomes huge or something like that. But you don't have to. If those requirements met, you don't have to fill up those forms. Does the corporation make any payments? So I answered yes, because I assumed they paid some contractors and they did issue 1099s. And here we have like other very general questions that majority of the time would not be applicable unless your C corporation is doing some more complex things that you might need to fill it up. Schedule L, M1, and M2 we already discussed. So that's kind of like a general overview of all these kind of things. Hope that made sense. Thank you so much.